In this presentation, we will turn on a setting to make expenses billable. In other words, expenses to be invoiced on invoices to customers within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. We're going to now take a look at a setting. First, let's think of our goal for that setting. To do that, we want to open up a bill. So we're going to go to the plus item up top. We'll select the plus item. We're looking at the vendors section. We want to open up a bill. So we're going to say pay bill, or not pay bill, just a bill. So the bill is going to be something when we have a bill that will increase accounts payable. That's what the bill is. The other side will typically be an expense, something like utilities expense, telephone expense, or any other type of expense for that bill. So we'll typically have a vendor, someone we will pay, and then some type of account that will be related to it, typically an expense account such as utilities, such as the phone bill, or any other type of expense account. Now, we can set up QuickBooks, and that's what we will do now for the settings, to have a tab which will be allowing this item to be billable or not. If the item is billable, which is a bit of a confusing term because we're in a bill and we're going to say it's billable. So when we say it's a bill, remember this form of a bill is really an accounts payable form. It means accounts payable, what we owe, the account that we owe, vendors we owe something to, is going up. We'll see more of these bills later on, and we'll see how they're entered. But the billable item, when we say something is billable down here and check it off as billable, it means that we're going to be able to bill this item to a customer, meaning whatever this expense was, we're going to put it on an invoice and bill the customer for it and include it to the invoice and expect to receive payment, kind of like a reimbursement for this expense. So if we had the phone bill and we're saying, hey, this is something that's billable to a customer, we're going to say it's billable. Then we could go to the invoice when we make the invoice for the customer, add this or link the amount we paid to that invoice and increase the amount that we're going to charge. So this is going to be a kind of an easy way for us to link out something that we're paying to an invoice and be able to have the exact amount that we paid be pulled over to that invoice. Note they're really kind of different in that the invoice represents revenue that we have. So whatever that revenue is, whether we say it's a reimbursement for a phone bill or something like that, or we just say it's going to be revenue for services that we did, it doesn't really matter from the perspective of it being revenue. It will be a revenue item. However, it's nice for us to be able to list out in the invoice to the customer, these are the items that we expended, and we have the actual bills for them. If we want to link over to them, we could probably find the bill related to it, and we are now charging you as per our agreement and putting that line item by line item on the invoice. Put another way, in other words, if we have a bill that's going to be reimbursed, when it's reimbursed, it's going to be recorded as revenue income, and the bill, whether it be reimbursed or not, is going to be an expense. So the revenue is going to go up by this bill that we're going to get money from, and the expense is still going to go up even though we got reimbursed, we paid the bill. It's just going to be that this bill is going to be used in order to calculate or increase the amount of revenue that we will receive. Now to the setting, so we'll close this back out now that we have our goal. We're going to go to the cog up top, so we're going to select this cog. We're going to go to the company, to the Your Company area. We want to go to the account and setting. So we want to go to account and setting. Once that is open, on the left side, we will have our options. We want to go to the expenses. So we'll select the expenses. And what we want to do is turn this one on. If we don't have this on, make expenses and items billable, that's the one. We're going to select, we could select the pencil or anywhere in this area, and that'll open it up. We are then going to check off the make expenses and items billable. We then want to keep the default setting, which is to track billable expenses and items as income in a single account. We're not going to charge sales tax for them. So we'll save that. Close this back out, and then take a look at a bill again. So if we open up another bill and we go to the bill, the vendor section, and a bill, and then scroll down to our input section, now we have this billable item. So if we were to say that we had some kind of auto and car then we could check off this billable item, and that will allow us then, once we create an invoice, to track this billable item to it or add the cost of this billable item to the invoice. Once again, note that it doesn't mean that we're not going to have an expense. Whatever the expense that we put in here, it will still be something that's going to increase the expense amount. It's just that we can now link that to the invoice, and it'll pull over that amount to the invoice for the line item. And as it does so, the revenue, of course, will go up. So if we then make an invoice with this billable item, the revenue will go up by whatever amount, which will increase revenue, and we'll still have the expense for whatever amount that we actually paid, and they will net out on the income statement. So it's not like we're netting them together and they disappear. We're going to have revenue increases, expenses increases. It's going to net out at the end of the day, whatever we bill the client, whether we call it auto or truck line item, or just, this is our bill for you. It's still an increase in revenue as we charge the invoice or sales receipt. And if we're paying the expense for the car and truck, it'll still be an expense, increasing the expense. The difference between revenue and expense will be the result of net income. For more accounting information and accounting courses, visit our website at accountinginstruction.info.